Good afternoon. Welcome to OptionsTender. It is Tuesday, February 4th, 2025. We're looking at SPY from the monthly. We're going to skip on SPX today. We're going to go down to the daily on each indice. Check those out, stop with the VIX, and then we'll do the 65 on SPY just so we can kind of get the near-term directional bias here today. Okay, so if you're new here, go down to that bottom right-hand corner, hit that OptionsTender logo, and subscribe. We're doing this intraday about noon 15 Eastern Standard Time. Consider becoming a YouTube member if you want to get these intraday. If not, they'll be posted at 4 p.m. for the public anyway. So appreciate all the support for this channel. You guys are amazing. So let's dive into it. We've clearly been on a bearish bias. We're against historic highs. This also goes back to 1929. This one is the 2008 21 top, and you have confluence here. So I think we're forming a top here. I think this is almost done. But essentially, we've just been doing this. So clearly, you can see that that can break to the upside. Do the same thing, right? Rinse, repeat. Or this is just forming here and it's going to fail, and then you have larger moves to the downside when some sort of consolidation like this fails. So keep an eye on that. We're mid-range through the month so far, but we're still holding above the 8 EMA. Let's go to the weekly. On the weekly time frame, we have the bullish rising wedge here, filling that out and holding that 20-week moving average. We're going to talk about that over and over. Is this going to hold? We were pinching in between so far for the week, but this candle is not done yet. So we're above the 8 EMA so far. So all is well on these higher time frames at this point. If we break down, we have lower levels that I'm looking for with this 50-week moving average and the breakout zone here around 560. Okay, I know that we are in time and price right now. We had possibly a low with this, we're in this week bar right here. So we're in timing for something to happen. Now, the next timing is into next week. So do we get a high or do we get a low into the coming up, it looks like February 10th and then later on the 18th. So we'll keep a sharp eye on this nice cluster here when price action comes into those time frames. On the daily trend is our friend. Here the trend is still up, right? So why aren't I bullish? Because we're against a ceiling, a historic ceiling. And at this point, I just think we're bouncing and we're trying to break out of this range. We've been in this range since the election for 3 months now. And this is going to break. When it breaks, whether it be upside or where I think downside, it's going to be a big move. So right now, as a bull, you're looking for this as a 1-2 setup, and you're looking for wave 3 to get grinding. I don't know if that's going to happen from earnings. Have Google tonight, Amazon on Thursday, or is it going to be employment situation? Is it going to be that's going to be before the bell, 8:30 Eastern Standard Time on Friday? So is it Friday that is it a free Friday again? Do we get this huge move to the upside from unemployment? The employment situation. All right. Now, as of right now, we're being held down by the 8 EMA, also this horizontal resistance. And in my opinion, I'll show you the count here, but I think this is the top, and we're looking for a 5-wave move down at this point. Okay. Simple as that, and this all lines up with this being a megaphone structure. If we reach the bottom, since we were up here at the top, if we reach the bottom of the structure, that's going to be right in our zone. I say 560, here's 565 and 555. That's a big zone from this consolidation previously, okay? Okay, so let's go over to the other board. Here we have time and price at 2-5. That's February 5th. So let's see if we're getting some sort of higher low into tomorrow. All right. Do we have another day? Do we get a high tomorrow? We have some unfinished business, I think, on the 65 minutes. So we'll look at that. So why is this also important? That 200 moving average. Sorry, I'm breathing heavy. I ran up the stairs. Here we go. So this entire move here, this last move that we've had here is from the top to the bottom, the retracements. And 50% retracement is going to be a big area where price comes into and won't likely just knife through it, okay? Or else that's super bearish because that coincides with our zone for the breakout. Also the 200 moving average, okay? So that's right in the center, 560. Now I'm counting this as a 1, 2, and then we're in the wave 3, where this is on a minor degree or minute, 1, 2, and so on. Okay, 3, 4, 5. There's going to be two ways to look at this. If this pans out exactly how I'm talking about, the bulls and the bears are going to be on the same page. All right, and that's dangerous. That's how you get big moves. So a lot of people, because the Qs did not make a new high here, a lot of people are looking at this as an A, a B, and then still a 5-wave move down. So bulls and bears looking at the same thing. And then wherever price stops with this wave count and structure, whether it be low or high, it doesn't matter. Both bulls and bears are looking for a bounce. That bounce, I'm expecting to fail. As a bull, you're looking for that to continue on. And that's only if this pattern fails, right? Because in the near term, meaning today and going into tomorrow, bulls want this to go from here. They want this to be a 1, a 2, and for 3 to continue. If this starts to fail, then both that bull-bear scenario I was talking about is going to come back into play into some of these retracement zones. So we'll go to the 65 in just a minute to wrap this up. But I want to go to SPX. SPX on the daily time frame, you can see the wedge much more clear now, and you can see the place where I think price is going to, the range. But we're going to have to get underneath this trend line. And so when this happens, you break out of the trend line, possibly it could go straight down to there, which that's sort of what I expect, being a 5-wave impulse move. But it could come from underneath, at least intraday, and back test that trend line. So we'll have to see how this acts. But if this is truly a third of a third, then this next wave is going to be the strongest of this entire move. Okay, so that should start imminently. Maybe we need to tag a little bit higher, and we'll look at that. Or it drops from here, but this is likely to start today or tomorrow to the downside. And with, not really any catalyst happening today, it could be, it could be a tweet, or I know the phone call with China. There's catalysts all over the place now. If you've traded through the last Trump administration, you would know that things got pretty crazy. And actually, I can show you here. Let's go back some years. And we can look at 16 through 18 to 20. Lots of stuff. So things went up, straight up, and then you had lots of trade war volatility here. All right, so we're kind of in that realm right now. I'm not saying these exact things are going to happen, but you see the volatility. And so that's a trader's paradise where price is heading up or down at any time. Okay, yes. So that's our target. Our target is 5,600, right around that zone. ES. A lot of information to put on the chart. That's why I usually don't have so much on there. I'll just go back to the 3-year. Okay, so what we're looking at right here is possibly this being a high. We have that huge, like 40-50% retracement of the dump from Friday over the weekend. Massive move that happened in minutes, really. And now price came back overnight and is forming a hangman doji. And one of the things that I want to point out, so that's a possible reversal candle in itself into the 8 EMA, which is our trend indicator. But also notice in all of these daily time frames, the moving averages they're going together. They're converging. This is a sign that price is going to break out, whether it's upside or downside, and it's going to start moving and it's going to start trending. Right now we're trending sideways. Okay. And that's that zone I was talking about for 3 months. And so all the moving averages are coming together, and then they're going to head in a direction. And that direction is going to be not in one certain way. The moves are still going to be volatile, but it's going to be a directional move with nice volatility into it. Let's go to QQQ. Tech market, what's happening? All right, so again, the moving averages converging. We have the 3-month range here again, and you can pretty much box it out right here. I know it looks a little different than SPY, but it got up here relatively stronger from back here. Yeah, the election lagging, and then took over and led, and now is weaker. And in my opinion, it's going to lead to the downside. So you have this range, and we're just right in the middle of that range. It's a falling wedge, which could be a bullish setup. It's quite possible when you're into these historic trend lines to the upside. I think it's just trying to fake people out, bait them in. That same thing happens every single time. Stocks only go up, right? And so we're looking at this possibly being, again, a 1-2. And when you're looking at, I don't know if I have it. Yeah, so we retraced back to the 62%. And I'll clean this up. So that's a 1-2 setup. And I don't have this done yet. So looking at this being a wave 1 here, but most traders are going to be skeptical of this because we didn't make a new high like SPY did here. So how can this be a 1-2 setup, but SPY up here starts the 1-2, 1-2. So right now we have 1-2, 1-2, and 1-2, which goes along with coiling up like a spring and then heading lower. And then what happens is near the lows where you have the 4-5, 4-5, 4-5 to work out these 3 structures, that's when QQQ and SPY converge in the wave counts converge. So, with SPY being here as the top, you have a 1-2, 1-2 setup. And then later on that will pan out as 4-5, 4-5, while this one will have to pan out a couple more, one more 4-5 out of the end. That's all that it doesn't have to go perfectly together. But clearly, if this is a bearish move, it's going to be a 5-wave move. SMH. SMH still weak. We can't really accept the fact that price is going to make a new high without SMH helping out. Okay, NVIDIA needs to help out, and that's the leader in this group, the semiconductors, and right now broke down from significant trend lines. Also, bear flag is just back testing over and over, holding sideways, but this now can be considered a 1-2, 1-2. Okay, 3, 4, 5, and this could start to lose momentum to the downside, even though it's leading, because it's already had such a big move. So this could pan out to be all the way down here to the 212 zone with this move. The wave 3 just can't be the smallest. So this wave 1 could be the largest one of the waves headed down. 2, and then 3, 4, 5, and kind of get more of a scrunchy move towards the end. And then you should see a significant relative strength going into a major bounce from SMH. Possibly. That's how it usually works. Oops. Let's go to IWM. IWM, this trend line and the 200 moving average just kind of holding things up here. So came back to it, and we're just bouncing, getting a trigger reaction off of it and holding in the 8 EMA. But you see the moving averages are coming together here as well. So I think this is going to start to fail and start leading the market to the downside with SMH. DIA, just helping hold things together. When this gets going, it really trends, and you could see that. So this is a simple 1-2 setup here, in my opinion, and is holding at the 8 EMA again. And I think this is going to continue to the downside and pretty relentlessly. VIX. VIX, again, it's the inverse of SPY, really. And it's just in the middle of its range. It came back. It's making higher lows and lower highs at this point. But holding on to the 8 and 20 moving averages, not really getting back to this 200. It already tested it. So I think this thing could start trending. This next move should be a bigger move. It should breach these highs here. And eventually it should breach those highs there. If Slim's stuff is happening, he played this on the public video, so I'm not worried about just talking about this, a low being in pretty soon here. And this, even though that's a higher low, I think the low's going to be in, and we have this next cycle of movement to the upside. It looks like it's just spot on, so good for him, and thanks for the extra information on the VIX. And going back to SPY, actually we'll stay here on the VIX, do a 65-minute, and we'll go backwards to just a SPY, and we'll end this. So you can see the consolidation area, with big spikes out of it, couldn't hold those zones. Well, next time it's not going to be so friendly. Okay, so we're getting tight in price action, just like all the other indices that I was talking about. And I think this is going to really start to move off of the 200 moving average right now. Didn't quite close the gap, but going to SPY, I'll show you, I didn't get my alert yet. So for some catalyst or something, it doesn't have to. It's starting to move down already, but we're still, going to have to break some lows if this is going to be bearish completely. But we'll go directly to this one here. We didn't quite make it to the 62%, but it doesn't matter. We're right in the zone. It's just very typical for a price to tag and have a little wick through the next Fibonacci when it makes it above the 50, for example, to make it to 62. But it doesn't have to. There's no rule that says that has to. And here's a closer look at the wave count. I know it gets busy in here with the time and price. We're going to try to clear that up. Actually, I'll start clearing it up right now as we do this. And we have a purple line here that's just showing the bulls and the bears where I think price is going. And then, both again are going to head to the upside. But if you continue this move to the upside, that's the bullish scenario with the turquoise. And then the purple is the next bear move to the downside. Okay. And so in this, I have in the turquoise an A, B, and a C all the way down here. And that would be our bullish count. Okay. Where this is just the end of wave 2, and that would be that entire move. I'll show you instead of just this entire move. That would be a wave 1, and we're looking at the A, the B, and a 5-wave move down to C into one of these time frames, and I think that's going to be around that February 18th area. that keeps popping up. Okay, and all right. So now with the bearish count, that says this is the high. Okay, these would have to move over here, and this is the high. And now in the purple, you get the 1, 2, which follows the same path. Wave 3, which is down to the 786 of this move. So that's going to give a reaction. But it's also, if you calculate the 1 to the 2 to the 3 extension, and that's a 162. That's typical. If you take the extension tool from wave 1, it's 162% of the length of wave 1, starting from wave 2. Okay, so that'd be wave 3. Get a shallow 4, maybe backtesting that 62 where price is going to have a reaction, and then getting a larger move or extended more down to wave 5 into that 560 zone. Okay, and then both bulls and bears should be looking for the same move to the upside, but it should fail, in my opinion. All right, now these are the extensions of wave 1 into wave 2, which I have to adjust because wave 2 went higher. And now the third minute wave, and again, let me clean this up, and I'll make it green because we want to indicate that the price should bounce off of there. Okay, so we should be looking for 570 if this wave wants to be stronger, then you can ignore if it continues after this 582. That is a scrunched up version of what price could happen. 1, 2, 3, 4, and 5 be the extension. If 3 is going to be the strongest, this minute 3, it's going to be, much more devastating. We could see this move all the way down to 570 before we see anything happen, but it doesn't have to be the case. Okay, so those are just 2 levels to watch out for: 583 and 570, and then you have a little bit more scrunched action if that's the case down low. Okay, could possibly go to 555. So that's how it would look, depending on how stretched out this is. Then you're probably going to have a crunched up next move here. Maybe an ending diagonal that shows loss of momentum. But yeah, we'll see. But either way, this should be a big move to the downside. All right. That's what I got for you guys. So we're in time and price here. We take that off, clear that up. We're in another time and price, so that's probably a high today. And then the next one goes into Friday. So do we get a low Friday? Do we have a high Friday? We will see. I think it's going to be a low. All right, thanks for joining us here at OptionsTender. Have a wonderful day. We'll talk to you tomorrow.